Um, so those are, yeah, personal services, personal appearance and wellness. So things like, oh, we got a lot. Never mind. So beverage and food service, entertainment and events, hospitality and guest services, home services, personal services, personal appearance and wellness, recreation and instructions, and then lastly, transportation and delivery. Those are kind of like big 8 categories shown here, and you can kind of see individual examples of those codes and their matching occupations here below. Looking at the interview tips, so interview tips to see if someone is eligible for the deduction. So we can ask the taxpayer, first of all, do you have your social security number, and is your filing status something other than married filing separately? You need both of those. Next, did you receive tips as part of your income? Were the tips received in cash, from a credit or debit card, or from a tip sharing arrangement? So if yes, we can move on. If not, that deduction is not allowed for those tips. Were the tips freely given by the customer without being required, negotiated, or included as part of the service? Is your job on the IRS list of occupations that customarily receives tips before 2025? Was the tip properly reported on a W-2, a 1099, or Form 4137 and properly designated as a tip? And if your tips were earned as an employee, skip to step 8. So if your tips were earned through self-employment, did your total business income include tips? Did your total business income, including tips, exceed your business expenses? And if they were an employee, we can go here. Is your modified AGI below $150,000 or 300,000 filing joint? And then Brad has included some additional case studies. We can look at Schedule 1A part. Again, this is what it'll look like on the actual print set of the 1040. And then in TaxSlayer, so here's a screenshot of what it'll look like in TaxSlayer. So it's that section that says no tax on tips. You'll calculate qualified tips included on Form W-2 Box 7 right there. If they have it from 4137 line 1, that'll be the second line. Or if they have tips that are qualified from 1099s, that'll be the third line. The screenshot shows the entry screen for the qualified tip deduction. Please note that TaxSlayer has placed the new code for the various deductions in the W-2 entry screen, but these are not expected to be widely used in this current tax year. TaxSlayer allows you to, third question. TaxSlayer allows you to enter the figures manually in the screen below, but it'll also pull the figures from box 12 if the appropriate code is selected. That said, they don't know if the IRS system will accept those new box 12 codes just yet, so using them prematurely might cause an e-file reject. We don't really know just yet. We're still kind of waiting to see what that looks like. Remember, the amount from Form 4137 line 1 column C should include both reported and unreported tips. Also, if a taxpayer has multiple employers, you need to treat each employer separately. Select the larger amount, either tips reported on W-2 or Form 4070, or tips reported on Form 4137 column C for each employer, and then you add them together. Similarly, for self-employed taxpayers with multiple businesses, remember to consider each Schedule C differently and include only the tips up to the net profit from each business in which the tips were earned. What remains unclear or unknown is where we will find the information about qualified tips for this current year. In terms of W-2 employees, Schedule 1A indicates that we can rely on Box 7 of the W-2 for this information, but in the case of self-employed individuals, rideshare drivers, Form 1099, rideshare drivers, for instance, Forms 1099K do not give us that level of detail. It's impossible, or it is possible that the tax summaries provided by certain companies might break down that information. And if so, that'd be really helpful. And we can rely on that information if it's provided, but there's no requirement for them to do so in this year. So we really are only hoping that we'll get that, but we really don't know whether to expect employers to provide that or not. Taxpayers will need to have a detailed records of exactly how much their reported income comes from tips, and it remains to be seen if this will happen. Brad's take is he wouldn't be surprised if TaxSlayer's entry screen changed from what we see now. He can envision better ways to handle it in the case of multiple employers, but to spell those out here would be speculation at best and presumptuous at worst. For now, what you see is what you get, but don't be surprised if those screens change down the road. Thanks, Brad. More check your knowledge. And should be it for tips. Okay. Any questions about the OB3 changes so far before we get into no tax on overtime?
It was a question out there, someone asked.
Is it in the chat?
Yes.
How will we determine the difference between regular tips and those tips received for large parties? Um, I don't believe like the tips received for large parties. I don't think those should be on the W-2, but I'm kind of speculating here. But like things like that are like mandatory, I don't know if those are received directly by the employer. Um, so I don't think those would be reflected on the W-2.
So my
According to
question
what
is
you read earlier, it would not count because it was required.
exactly, but my question is if all of those tips are included in one bucket on the whatever form we get from the employee, how will we know, or will we just depend on the employee to tell us that of the $10,000 that he has in that bucket for tips, 9,000 of that is regular tips and 1,000 came from tips from large parties?
Well, I don't think like those tips for large parties already shouldn't have been considered qualifying tips. I don't think those would be reflected in like the box 7 for Social Security tips.
Okay, so I'm to assume that anything that's in box 7 is something I can include.
That's my understanding. Let me go
Okay.
back up to verify that. Again, though, this is all new to me as well, but yeah, that's my understanding. Let me see one moment.
That's fine if that's the understanding. I just didn't know and I wanted clarification on that.
'Cause, yeah, the guidance for calculating it for employees, so you can use the total amount of Social Security tips reported on the W-2 box 7 for taxpayers with wages of more. Okay, that's not important. Yeah, so pretty much like if the employers offer us nothing else that we can use to get more detailed information, it looks like the go-to number we can work with is what's reported in box 7 on a W-2 for employees. It's different for those who are self-employed, but it looks like that's kind of starting point is whatever is on Social Security tips in box 7 for employees.
Okay, no problem. Thank you.
Oh yeah, no problem. You're welcome. Hey, these are good questions because I'm still kind of figuring it out myself. But yeah, I don't think those bigger tips, like anything mandatory like that, should already not be included in box 7. So that should automatically take it out before it even gets to the W-2. Any other questions before we move on to overtime? All right, we can get started. All right, no tax on overtime. This is another one that we fear will bring clients to tax sites with unrealistic expectations because of the name, because the law uses the Federal Fair Labor Standards Act, FLSA, definition of overtime, which can mean something different what the taxpayer expects. First, we need to define the term, so let's look at rules for this deduction, and then we'll take a look at some examples of what constitutes overtime under the federal FLSA definition and what does not. So just to clarify the terms, so regular rate of pay, also called regular pay, this is the amount paid to a taxpayer in a standard work week, which is usually 40 hours. This can be calculated in many ways. For instance, a taxpayer could make $15 per hour, or the taxpayer might be paid a salary of $600 per week, which is divided by 40 to obtain the regular rate of pay for that week. If taxpayers receive commissions or non-discretionary bonuses, those are generally added to the salary or hourly amount, and then that figure is divided by 40 to get the rate on which overtime is based for a particular week. In such cases, the regular rate of pay may be different from week to week if the taxpayer receives different amounts of commission in different weeks. Overtime, also called overtime pay, is the amount paid to an employee who has worked over and above the regular work. It consists of the employee's regular rate of pay and the overtime premium. If a taxpayer's regular rate of pay is $20 per hour and the taxpayer is paid time and a half for overtime, the overtime pay is $30 per hour for the $30 per hour for the extra hours. Pay stubs or statements might list the overtime paid for the year. Overtime premium. Overtime premium is the amount over and above a taxpayer's regular rate of pay. If a taxpayer's regular rate of pay is $20 per hour and the taxpayer is paid time and a half for overtime, the overtime premium would be $10 per hour, the amount that exceeds the regular rate of pay of $20 per hour. Pay stubs and statements might list that overtime premium for the year. So do y'all see, I guess, the difference here between overtime pay and overtime premium? It looks like overtime pay includes both the premium and the regular pay, whereas overtime premium is just excess on top of the regular pay. So in the case of, this example, his regular pay is $20, so his full overtime pay is $30, but $10 of that is the overtime premium, whereas the $20 out of that 30 would just be his regular pay. Looking at qualified overtime, the amount of overtime premium that is required to be paid to the employee who is covered by the federal FLSA. If the employee is paid time and a half, the overtime premium and the qualified overtime should generally be the same. If a taxpayer is paid double time, only half of that premium is considered qualified overtime for this purpose. So yeah, those are just kind of a little tricky just because they're kind of all sound the same, but they're referring to different things. So just make sure that we understand these terms because we will use them frequently and they are not interchangeable. All right, what we think we know. A new deduction exists for tax years 2025 through 2028. Individuals who receive qualified overtime compensation may deduct the pay that exceeds the regular rate of pay that is required by the federal FLSA and reported on a W-2, 1099, or other specified statement furnished to the individual. For the tax year 2025 only, the IRS has announced that they will not penalize employers for not providing that information or filing information returns with the IRS containing those figures, but it is encouraging them to provide that information in some format so that taxpayers can claim the deduction. Again, the bottom line is that taxpayers will need something from their employer. This is going to be a tricky year because employers might not be giving that out or might not have standardized how they want to share that information, but we as taxpayers need something from the employer. So some rules for claiming that deduction. The taxpayer's filing status cannot be married filing separately. The maximum deduction is $12,500 or $25,000 for joint filers, and the deduction phases out for taxpayers with modified AGI above $150,000 or $300,000 for joint filers. The deduction is available to taxpayers who itemize or those who take the standard deduction, and taxpayers must include a Social Security number on the return that is valid for employment as of the time the tax return is filed. All right, what constitutes qualified overtime and what does not? Qualified overtime, as measured by the Fair Labor Standards Act, refers to pay received for hours worked exceeding 40 hours per week and includes only the required premium above a taxpayer's regular rate of pay for those hours, specifically the half in time and half. If we look at example 1, York works as a checker at a grocery store. He works 45 hours in a week. His regular rate of pay is $10 per hour. And his regular work week is 40 hours. So for those 5 extra hours per week that he works, he's paid time and a half or $15 per hour. And the amount of qualified overtime is the $5 premium above his regular rate of pay for those extra hours. So in total, for those 5 hours of overtime, his qualified overtime is going to be $25 because that is his overtime premium. In other words, the entire $15 per hour for those 5 extra hours is not qualified overtime, only the amount that exceeds his regular rate of pay for those extra hours. So if we look here, Zoe's regular work week is 36 hours. If she works a 40-hour week, her company views those extra 4 hours as overtime. Federal FLSA does not, so she will have no qualified overtime for purposes of deduction. The employer isn't the one determining that. It is set as a 40-hour work week according to the federal FLSA. Some states define overtime differently. Arthur lives in California. He works 10 hours on Monday, Tuesday, Wednesday, and Thursday. California law says he earns 2 hours of overtime per day, but federal law does not. For the purposes of this deduction, he does not have qualified overtime because it all goes back to the federal law in defining overtime. So specialized guidance for 2025. As with the deduction for tips, the deduction for overtime comes with some guidance to help with the transition to full implementation. So just special things for this year. Employers who are uncertain if they are covered by and not exempt from the federal FLSA should check with their employers. Assuming the taxpayer is covered by and not exempt from the federal FSLA, continue. If an employer has voluntarily provided the amount of qualified overtime in box 14 of the W-2, the employee may rely on this amount. Otherwise, assuming all of an employee's overtime pay is included on their W-2 as part of the wages in box 1, the employee may use one of the methods below to figure the appropriate amount of qualified overtime. If an employee has a statement of some sort that covers all pay for the year 2025 and it shows either the overtime pay for the year or the overtime premium paid for the year, use the table on the next page and divide whichever amount you have by the appropriate figure. This might actually be good if they can bring like a pay stub, their last pay stub of the year, and it shows that separation in their payment. That might actually be a really helpful tool, if that's something that prints on their pay stub. If an employee's overtime would be underestimated because she was paid a non-discretionary bonus or commission, adjustments may need to be made. Guidance does not define how to make those adjustments. A non-discretionary bonus is a bonus paid for having met goals, quotas, or other performance targets. Non-discretionary bonuses must be taken into account when figuring an employee's regular rate of pay and can affect the employee's overtime compensation. Discretionary bonuses are bonuses given at the employer's discretion with no conditions attached. They do not factor into an employee's regular rate of pay and do not impact an employee's overtime compensation. Absent a statement that indicates either an employee's overtime paid for the year or an employee's overtime premium paid for the year, the employee may need to obtain information from an employer, including an approximation of the employee's regular rate of pay and hours of service above 40 per week. This information could be used to estimate the amount of qualified overtime for 2025, but employees should keep detailed records of how the figures were reached. Caution, certain groups of workers, including but not limited to public sector workers, fire protection, and law enforcement workers, group home employees, and others may operate under different sections of the FLSA and may have different rules for establishing their overtime pay eligibility. If in doubt, ask the taxpayer to check with their employer. If needed, search the Department of Labor's website for guidance regarding the particular occupation. So again, we may have to ask taxpayers that they need to contact their employer, but ultimately, we need to see something from the employer. Ways to calculate that. So again, recognizing the difference between overtime pay and overtime premium, and asking, is your overtime paid time and a half? Is it double time? Is it 2.5 times? Is it triple time? And if it's triple time, what is your job? Because I need to apply for that. I have triple time overtime. But then just taking that, what they say, whether they give us the entire overtime pay, so including the regular pay and the overtime premium, or if they can just give us the overtime premium, dividing by the appropriate amount, and that'll give us the qualified overtime to use for this deduction.
And a lot of them probably will not know.
Oh yeah, a lot of them probably will not know. We're really, really hoping that employers find some way to provide documentation for those who this would be applicable to. But a lot of it might just be conversation, and a lot of it might be them needing to contact their employer to get some kind of documentation that we can use. Some more interview tips, this time for determining eligibility for the deduction of overtime. So again, we start with the same questions. Do you have a social security number that's valid for work? And is your filing status something other than married filing separately? Do you receive overtime compensation? Is the overtime qualified under the federal FLSA, time and a half paid for hours worked over 40 per week, unless a different section of the FSLA applies? Was the overtime properly reported to you by your employer on a W-2, 1099, or other specified statement? If not, does the special guidance for 2025 apply? And lastly, is your modified AGI above 150,000 or 300,000 if filing jointly? Here's what it looks like on the Schedule 1A. So on the printout, this is what it'll look like when it calculates all that. And then this is what it'll look like in TaxSlayer. So TaxSlayer has a box where it says qualified overtime compensation included on Form W-2 Box 1, or the second line is for 1099s, NEC, or miscellaneous. Screenshot below shows the entries that will be used to capture any qualified overtime. As with the deduction for tips, if you're able to enter the qualified overtime on the W-2 because it's provided in box 12 with the new code TT, it will carry to the screen. But remember, there's a lot of questions as to whether the e-file system will accept that code for 2025 or not. And we still ultimately don't really know. What remains unclear or unknown in 2026, it'll be easy to spot qualified overtime income on overtime. I cannot talk. Qualified overtime on a W-2. It'll be listed in box 12 with the code TT. But for tax year 2025, the W-2s are not expected to change from previous years, so it's unclear what employers will provide to taxpayers to report overtime information. Pay stubs or statements could include overtime premiums, overtime pay, or neither. And some employers may choose to provide an accounting of the overtime paid on the W-2 in box 14. So ultimately, for this year, it's not going to be standardized until future years. So we need something from an employer, but that might look like different things while it's before it's standardized in future years. Brad's take is he thinks the biggest challenge we face will be taxpayers who assume all of their overtime pay qualifies for the deduction, and that's not how this works. It'll be important to understand the rules for this deduction so that when taxpayers question you with vague things like, I know I work more overtime than that, you're prepared to address those questions. I think the other problem will be a lack of standardized reporting of overtime for tax year 2025. Many employers or payroll services might not have tracked overtime in this way because there was no need for them to do so before this tax bill. And absent concrete information from their employer, it could be tempting to try and help taxpayers calculate or worse, estimate their overtime, and it would be tempting for taxpayers to ask you to do so. I would not guess figures without reasonable documentation of where they came from, and we've tried to outline what that could look like. So again, we need something. This will be a lot easier to do in future years when this is all standardized on that box 12 code, but for now, we need something from the employer to be able to take this deduction on tax year 2025. Any questions before I move on?
This is Sarah from Rhodes. I was going to say the thing about that Brad was saying about the overtime in his note. I've seen that on like accountant Instagram a lot, is that people have been upset and surprised that all of their overtime pay wasn't was not untaxed or whatever.
Oh yeah, we are anticipating that conversation to come up, to come up a little bit. But that's how it can be when there's a new tax change like this. A lot of times people hear the headlines that, we want to hear, and unfortunately sometimes that's not the case. So yeah, we anticipate having to have those conversations. I would not be shocked if we have to have a few of those throughout the season.
It's just like the Social Security part, where they think that you have to have Social Security in order to get that $6,000 credit.
Right. Yeah, just a lot of miscommunication about it. And as time goes on and as these things become more standardized, I think we'll get better documentation, and I think there'll be more easily accessible information going around about these things. But a lot of this has just kind of been in a state of confusion and uncertainty these past couple of months. So, when that happens, it's easy for things to be, for there to be misinformation and for people to get the wrong idea, especially when, the name of it is no tax on income or no tax on overtime or no tax on tips. So just making sure we know what it actually entails and that we can explain that to people, even if, it might be a little disappointing to hear that not everything is tax free.
So I have a question. So when a person come in with a W-2 and its overtime is in said box 14 now, I guess, in the state's overtime. So do you use that whole amount?
If his overtime is in box 14, so I believe my understanding is we would need to figure out what is his qualified overtime from that. So it would be like, we'd have to ask and see if it is like pay and a half. And in that case, we would figure out, how to calculate pay and a half from whatever that amount in box 14 would be. But we don't really know. Like, we don't know exactly what it'll be in box 14. We're hoping that'll be some kind of like some text that'll describe whether that is actually like, if it's the overtime pay, is that the overtime premium? Because those mean different things. We're not exactly sure, it might be some back and forth with the employer to verify what that account or for what that amount in box 14 means. Where's that at? Because right now that's still part of what remains unknown because it won't be standardized for this year. So if there is an amount in box 14, hopefully there'll be something to indicate what that amount refers to, because we would need to know if that is referring to an overtime premium, overtime pay, or neither, and also, what their rate of overtime is that we can use as that calculation.
Yeah. But that's what I'm saying. Most people when they come into the tax office, they come in and say, I don't work 40 hours of overtime. They ain't talking about they talking about for the year. Most time people don't know how much they don't work overtime for the year. So it ain't like you talk about working 20 hours overtime for this week. So,
Right.
but most people don't know the difference between you work overtime. Regular people don't know the difference between premium overtime and non-premium. It's overtime.
Right.
So when they come, so how do we calculate? I don't know if Joe Blow is making $35 an hour and he done work 15 hours overtime. I don't, if he get time and a half on a holiday, he get double time. How do we calculate that? We don't know that. More likely the person don't know that. Right.
Hunter,
Right.
Well, let me
Yes,
ask
ma'am.
a question.
I think that should be given to spec. Spec should give some guidance on some of that.
Right, because it's trying to say we need to try to figure out, do he get time and a half or what? The person that come and sit in front of, he won't know. Right. Not
But
for the
the
whole
I
team.
think a lot of this
IRS
should be put on the employer to
Oh, yeah,
provide a breakdown of all of that.
I
Because there's no
agree.
way, like you've stated, there's no way that if I'm working overtime, I'm going to know how much of this is overtime on my total that has been given.
Oh, I agree, and that's the goal. Like I'm, I think it'll end up being a lot of back and forth where we have to tell someone to contact their employer, which people don't want to hear. But like ideally, this, like you said, this is going to be pushed back to them because it's going to be standardized by them in future years anyway. So for this year, it's really up to them to provide it in a way where it's clearly able to be understood what that amount is for us to put it in the box. So, and we need something from the employer regardless. So I'm not anticipating that we'll just get a lot of W-2s with a number in box 14 showing overtime. But truthfully, like we don't really know how employers are going to try and report it this time. So we'll just kind of have to see when the filing season starts, we'll have to see what employers are doing and kind of work from that.
normally when it's a new procedure like this, they have conference calls, to discuss this as it gets closer to the date, like the 26th for filing.
Right. And as soon as we hear updated information, we try and share that with y'all as soon as we have it. Just a lot of this is really, really new and like just now being implemented like in the TaxSlayer software and things like that. So we're just trying to get it out as soon as we have info, we want to share with y'all.
Are these items in the exam that y'all know of? The
No, I
current
don't.
exam?
I
No,
don't believe so.
No,
No,
they're not.
Okay.
no.
I haven't retaken mine yet.
Yeah,
Do it
no,
this weekend.
none of this should be in the exam.
Okay, thank you.
No problem. All right, and then the last big one for the OB3 is just no tax on car loan interest, and that's pretty straightforward for the years 2025 through 2028. Taxpayers may deduct interest on a loan used to purchase a qualified vehicle, provided the vehicle was purchased for personal use and meets other tests. The maximum annual deduction is $10,000. The deduction begins to phase out for taxpayers with the modified AGI above $100,000. The loan must have been taken out after December 31st, 2024. The loan must have been used to purchase a new vehicle, not a used vehicle. Vehicle must have been purchased for personal, not business or commercial use. Loan is secured by a lien on the vehicle. If a loan that meets the above criteria is later refinanced, the interest paid on the refinanced loan is generally eligible for the deduction as well, up to the amount of the amount refinanced from the first loan. A qualified vehicle is a car, minivan, van, SUV, pickup truck, or motorcycle with a gross vehicle weight rating of less than 14,000 pounds and that has undergone final assembly in the United States. The taxpayer must include the vehicle identification number on the tax return to claim this deduction and run a VIN through the VIN decoder from NHTSA to determine if its plant of final assembly is located in the U.S. This deduction is available whether the taxpayer takes a standard or itemized deduction, and lenders must provide statements similar to 1098 for mortgages showing the interest received by the lender during the year. Beginning in tax year 2026, this will likely be called a 1098 PLI. You can see the draft of the new form on the following page, but you probably won't see it this year. So again, this is something that should be in future years, but just not this year. This will be reported on a form. Here's what that looks like on the new Schedule 1A. You can see where you'll put that VIN in, or what it'll print out on the print set. That VIN will be put in there. And then in TaxSlayer, here's a screenshot of what it'll look like in TaxSlayer, where you'll have to type in the vehicle identification number, the date the new vehicle was purchased, the interest deducted on Schedule C, E, or F, or interest being deducted on the Schedule 1A. The proposed regulations are clear that the vehicle must have been purchased for personal use. Focus is on the intent of the taxpayer when purchasing the vehicle. Use of the vehicle does not need to be reevaluated in years following the purchase. The taxpayer must have intended that more than 50% of the vehicle usage is for personal reasons. Taxpayers who use their car for personal use, but who also have some business use of the vehicle, may allocate interest between Schedules 1A, Schedule C, E, or F. Allocation must be proportionate to usage. Taxpayer uses her vehicle 75% for personal reasons and 25% for business reasons. She may elect to allocate the interest accordingly, but she is not required to do so. Brad's take is people assume that if they purchased a car in 2025, even if it was a used vehicle, it counted for the purposes of this deduction. Taxpayer must be the first owner of the vehicle, and the vehicle has to have been purchased in 2025 to count for this year's tax return. Taxpayers must also provide a statement from the lender showing the qualified interest that was paid, similar to the 1098 that shows qualified mortgage interest. And lastly, just some other odds and ends of changes from this provision. The child tax credit has been increased to $2,200 per child for 2025 and will be indexed for inflation in future years. Refundable portion of the credit is $1,700 per child. Also, regarding the child tax credit new for 2025, the taxpayer must have a Social Security number to claim the child tax credit or additional child tax credit. Previously, only the child was required to have a Social Security number, so this is a significant change for I-10 filers. To repeat, on a joint return, this condition is satisfied if either the taxpayer or a spouse has a Social Security number. Excuse me. The state and local tax SALT deduction is increased temporarily. It'll be increased to $40,000, $20,000 if married filing separately, and this will be indexed for inflation through tax year 2029. Form 1099-K. OB3 has reversed the reporting requirement changes for third-party settlement organizations. If a taxpayer receives more than $20,000 in payments and has more than 200 transactions in a year via the TPSO for sales of goods or services, the TPSO is required to send a Form 1099-K. A TPSO can choose to send a 1099-K for lower amounts. Some states have lower reporting requirements. Keep in mind that a TPSO is a third party who handles payments for you, like PayPal or Venmo, but also Uber, DoorDash, any organization that accepts payments from someone else to you on your behalf. You don't get the credit card number of the person making the payment. Third party does. On the other hand, if you accept credit cards directly in any amount, you should receive a Form 1099-K. Form 1099-R. There is a new distribution code that can be found in Box 7. Code Y is used to identify a qualified charitable distribution. Previously, you had to rely on the taxpayer to disclose that a distribution represented a UC. Form 5405 for the first-time homebuyer's credit. It's been eliminated and cannot be filed for tax year 2025. Energy credits claimed on Form 5695. These credits were supposed to be valid through 2032, now expire after tax year 2025. Also, for items claimed on Part 2 of the form, taxpayers are now required to provide the 4-digit qualified manufacturer identification number or specified property placed into service after 12/31/24. Affordable Care Act for taxpayers who are insured through the federal or state marketplaces. 2025 will be the last year that repayment caps will be in place if a taxpayer has underestimated income. It's important to show lines 27 and 28 of Forms 8962 to taxpayers who owe a repayment. Explain to them that this year, the smaller of these two numbers, smaller of those two lines is what they are repaying. Next year, line 28 will no longer exist, and line 27 will be the repayment amount if all things stay the same. So assuming that this is still happening for next year, this is a really important one to communicate to taxpayers, because I know I've worked with a lot of people where that overpayment cap for Marketplace has really been a huge difference in terms of them owing back whatever the cap amount of, like, say, $750 versus a full amount of maybe $10,000 in, like, an extreme case. So if we're working with people and we see that we put in that 1095A, if it makes their refund turn red or it makes them owe more money, you really want to explain to them, like, how that little safety net of that maximum amount is going away in future years. So they really, really need to call the marketplace and make adjustments to avoid having to pay in future years, because, like, if you've just been relying on that maximum payment amount capping you at like $750 or whatever it is, it could be, very, very detrimental. Just have no idea that safety net will be gone or that cap will be gone, and then being hit with an incredibly high tax bill in future years. So if we see people who need to adjust their ACA subsidies, make sure we tell them, because that's going to get a lot more difficult in future years. Not this year. Many people have heard about the extra deduction for charitable giving of up to $1,000 for taxpayers who don't itemize. This provision does not take effect until next year. And also not this year, teachers need to know that changes are coming to the educator expense deduction in 2026. Through $300 above the line deduction will increase to $350 in 2026. Bigger news is that if a teacher has expenses in excess of that amount, those expenses can be claimed on Schedule A as an itemized deduction if the taxpayer has enough deductions to itemize. Bottom line is, explain to your teachers that they should keep all receipts for educator expenses, even if they total more than $300, in case that helps them, in case maybe in the next year they itemize, even though they don't think it would be beneficial, depending on what those expenses are and what their other itemized expenses might be. It might be helpful for them just to keep those receipts. And bonus, coaches now qualify for this deduction as well. And that's it for the OB3 changes in terms of this document. Are there any questions about that?
Yes. On the about the car. So this year, say if you bought a new car November, you can, and you ain't paying cash, right? So you taking the interest off the loan,
Okay.
but you have to have a statement from the dealership.
Yeah, the lenders must provide statements similar to a 1098 showing the interest received by the lender during the year.
Yeah.
So yeah, like for this and like a lot of the other ones, like we need some kind of documentation from a lender or from payers in the other examples. But a lot of this is really new, and the lenders might not know that they're required to do that. So
But
I really hope.
they should get papers anyway with the interest amount and the VIN number and all that's necessary.
But isn't the
Yeah,
interest for the whole amount and not broken down? So they wouldn't know what portion would be for the year that they're filing, which would be 25 if they purchased the car in November, unless they prorated it and divided it by whatever number period of time that
Yeah,
they
that's
purchased
what
it
That's
for.
what they're gonna have to do. Yeah, yeah.
So that's whether you itemize or just standard deduction, still can get the credit.
Right.
yeah.
Okay. I just want to know because somebody had already asked me about that. They bought a new truck
I did
last
too.
month.
I did too.
They bought a brand new truck last month, and they already asked me about would they be able to get the deduction, right?
Yes.
Is that just going to be for the 1 year, or is that something that's going to be able to be done for the lifetime of the loan?
I think
So-
it's
I
going to
think
be.
it's in it to 28.
Yeah, I think it's just
Yeah, it's the 28.
25 to 28, but ideally in future years we'll have this form to easily get that information. But yeah,
Right on.
until 28.
Yeah.
All right. Well, thank y'all for listening to me talk. I've got one other thing I want to say. This isn't specifically about this document, but I want to talk about direct deposits, phasing out of paper checks. Essentially, the government is phasing out paper checks entirely, which, we serve about maybe 10,000 people each year. And I would say, off the top of my head, maybe about 20% of the people that we serve get paper checks. So right now, there's still a lot of, I guess, mixed messaging on what that's going to play out like for this tax season. But the general consensus is they will still probably be able to get their paper checks, but they're going to be heavily, heavily delayed. And we very, very want to strongly encourage everyone to use a direct deposit. Because from my understanding, the process, as the most recent update that's been communicated to me, is that the process will essentially be, if they submit their return with no direct deposit information, then the IRS is going to send them a letter requesting the direct deposit information or requesting like an exemption form or like an exception, and they'll need to respond to that. And if they don't respond to that letter, then their return or their refund will not be sent out via paper check for a minimum of 6 weeks. That is the most recent communication that's been given to me. But the main thing is they are really focused on phasing out paper checks entirely. So we're really, really encouraging all of our taxpayers to use direct deposit. We're really hoping to get that 20% down to a lower number. And I'll talk to site coordinators more about this, but we're working on different partnerships with different financial institutions, particularly Orion Financial, to come up with solutions for taxpayers who need accounts. And there should be information for that at sites, and site coordinators will learn more about that on Saturday.
Well,
But the main
Hunter,
thing,
we used to have Wells Fargo was set up at Southland Mall at a couple of years, and we had different banks to help people who didn't have direct deposit information.
oh yeah, that is what Matt and I have been working on these past couple of months. And we'll talk to the site coordinators more about that this Saturday with a representative from Orion. But essentially, we're working on a way where taxpayers will be able to set up a free direct deposit account, like ideally during their wait time to see us if they don't have one. But the main thing is that we just want to encourage taxpayers as much as we can to use direct deposit and let them know that, while there's still a lot of mixed messaging right now, one thing I think we can safely assume is that they will, at the minimum, experience very, very heavy delays in receiving their refund if they do not elect for direct deposit. So that's kind of the main thing we want to communicate to taxpayers at this time. And I think I'm
Hey, hon, I
done.
got one more question on the car loan thing. You said if you're married filing separate, you can't get the credit, right?
Which credit?
On the car loan.
I think so. Let me double check. Hang on.
I think I'm gonna put it in my notes. It said uh MFS no.
Let's see.
That's what I recall too. They're discouraging them somewhat from filing married filing separate because you do already lose some deductions, and I'm thinking this is another one.
Yeah.
So give me one moment. Huh.
I don't remember reading on the car loan, but I remember reading for the other.
Yeah, so I'm looking at the form now, and that's specified for the no tax on overtime and the no tax on tips. Um,
But
Right.
for the
it's not on the car loan.
Yeah, I'm not seeing on the car loan. That's not to say that the final version of that policy won't have that as an amendment to it, but I'm not seeing that on the most recent sheet that I have.
Okay. I just wanted to be sure. I hadn't jotted it down. I had to know about MFS for that. Might have just been for the other ones.
Yeah, no, that's a good catch. Yeah, because I'm not seeing that on the list for the car loan one on this sheet. But that's
Okay.
not to say that won't be on the final version. We'll just have to see what it's looking like on the 26th.
Okay.
I would suggest that each of you, since he sent it out, print this off so that you would have this as your handy guide and read upon it.
Hello.
Hello? Oh, Miss Deborah, you got your hand raised?
Yes, I do. Good evening to everybody. I have a question concerning the Affordable Care Act.
Okay.
Going back to there, okay, so did you say on beginning next year that they are phasing out the cushion that that those who the customers or whatever that have that would be getting? So which means their standard uh, or the amount that they pay in or whatever would be higher, or it can affect them having to pay back money. How could you explain it again?
Yes, ma'am. So what I was talking about in that update is them paying it back. So like essentially if a taxpayer does not calculate their ACA premiums like correctly with the marketplace, if like they set their subsidies for their healthcare plan to be too high or too low based on what their income is at the end of the year, then what can often
Mm-hmm.
happen is when they file their tax return will say that they owe a certain amount back. And in
Mm-hmm.
previous years, there's been kind of like a cap on their back payment based
Mm-hmm.
on based on their income. Um, and that can sometimes save taxpayers from having to pay back a lot of money because that cap will be there are two caps. I forget what the actual amounts are. I think one is either $650 or something like that.
Mm-hmm.
But for a lot of people, that can be like a maximum repayment cap of $650, where if there was no cap, that could be something in the thousands of dollars. And that cap is being eliminated starting next year. So not this year, but starting
Okay.
next year. So yeah, if we see
Okay.
people who would be affected by that, we definitely want to tell them, make them aware of that, and encourage them to, get their numbers readjusted with the marketplace so that they'll avoid being hit with those payments when that cap is gone in the next year.
Okay. Thank you.
You're welcome.
Are we going over the questions like we did last year?
We'll cover the questions for the three exams at the end of the training. Yes, sir.
All right.
All right, then I think I'm done. Are we moving on to scope of service chart?
Can we get a 5 minute break?
Oh yeah, absolutely. We'll get a 5 minute break and come back. What is that? 7:46? Is that right?
Yeah.
Okay. I mean, we can go. Yeah, we can do that. Or do you just want to come back? I'm worried about time constraint. How much time do you think we got? Want to do 7:50?
Well, we supposed to be finished at 9 or at least by 9, so I
Well,
think we'll make it.
yeah, I can go through the test pretty quick. Okay, do y'all want to come back at 7:50? All right, I'm gonna say so.
Yeah, that's great.
Yeah.
All right, cool, cool, cool.
Are we ready?
I'm ready.
I'm back.
Okay, we're going to start with the scope of service, and this is found in the Pub 4012. The scope of service lets us know what we can and what we cannot do. It gives the limitations. It tells you if you're looking at something that's over the amount, or if you're looking at a subject that you're doing, it lets you know what you're certified to. So when using this list, you notice that the column 3, which is this in scope or out of scope, yes or no, it does not stand alone. you have to look at columns 4 and 5 to determine the complete information. So if no certification is listed right, like this one, then the topic is in scope for all certification levels. So if you see them blank like this, you'll know that you don't have to be certified to a certain level to do this. So it's going by listing the Form 1040, the schedules, and the forms. It tells you each line item, whether you can or cannot. So all you would do is for Form 1040, for the digital asset virtual currency question, is it in scope or not? It is in scope, and it tells you why it's in scope and what it's in scope for. And it is certified. You don't have to have a certain certification level. Any questions on that? Because all you're going to do is just go down this form and see, and they will tell you what is not in scope for a particular item. Like the Form 1040 lines 4AB, 5AB, it is in scope if the IRA pension and annuity CF 1099R for limitations. Basic if taxable amount is shown, but it has to be advanced if it's not an amount shown in that field. And if it's a foreign retirement arrangement, it is out of scope. So each one is going to say what's out of scope, and you'll just look at that. If you have any questions on any forms that you're looking at or completing. It goes all the way down. These are the schedules, the S. And you see for Form W2G, which is gambling, it is in scope for certain gambling winnings, but it's not in scope for professional gamblers who use Schedule C. Any questions? Schedules 1, Schedules 2, and Schedules 3. All the way down. Then it goes to Schedules A, B, C, D, all the different schedules. For itemized deduction, you have to have advanced certification. And it tells you what it's out of scope for. And this is nothing new for those, everybody's returning, so you should already know about this. Any questions? Okay, well, we're going to move right along to important changes, which is in the 4491. Starting with the due date. The due date is April the 15th. I think that's on a Wednesday this year. Which will be, that's our closing date, Hannah.
That's right. So
we'll be working. Okay, then tax forms and publication changes. It starts off with the 1099K. I think, Hannah, you talked about that, but what they did was raise it up to $2,500 for them to report it as income. These next two items, the Form 1040, they are big changes on the form itself. If you got a 1040 for 2025 and look at it, you'll see these changes on the form. And they're talking about the cease where it has both the wife and the husband, if it's a joint return. And they have a checkbox now added. They have the dependency part is really different when you look at that form. The Schedule 1. And it's telling you the check boxes were added. The 1099R and the 5498, that's a new code Y added to box 7 to identify a qualified charitable distribution. I don't know if we're going to get any of those or not. 5405, this is the repayment of the first time home buyer credit. And what they're saying is this form cannot be filed for 2025. So we should not see any. I don't know what that's going to do for those rejects that we might get. Because I don't know if the 10 years is up yet. 2008. Seems like it'll be 2028, but that's another item that Spec is going to have to give us some more information on. The 5695, that's the residential energy credit. It now requires claiming the credit to include the unique qualified product identification number assigned by a qualified manufacturer for specified property placed into service after 12/31/24. Schedule 1A, which Hunter went over about all the different changes on the no taxes on tips, overtime, and no tax on car loan interest and the enhanced. We've already talked about that. Now, as the tax law changes, refer to the respective lessons for details. I don't think that we're going to see this first one. It talks about expands the deductibility of charitable contributions to include all veteran services organizations, making contributions to all federal charter tax-exempt organizations that serve current and former members of the military tax deductible. Individuals aged 50 or older by the end of the tax year may make catch-up contributions. I don't think we're going to see any of that. Each year, the personal exemption amount, but what they're saying here is that it's eliminated for good. The $300 is still for 2025, but in the future, it's going to change. The standard deduction changes every year, which is what Hunter went over earlier. Limitation, he went over this. This has to do with the income tax. People who are 65 and older, that goes up every year, and it's going up $50 a year. For 2025, the standard deduction amount for an individual who may be claimed as a dependent by another taxpayer cannot exceed the greater of $1,350 or the sum of $450 and the individual's earned income. Kitty tax, I haven't had any of that at our site. I don't think we've had any. Standard mileage rate, this is very good for those in business. 70 cents a mile is a lot of money. So that would be a big expense for those people who have small businesses. 21 cents and 14 cents, that didn't change. Okay. All of this, the deduction for qualified business income and the retirement savings contribution didn't change. The qualified overtime compensation, that's still $12,500 and $25,000 in the case of a joint return. I think we talked about that earlier. No tax on tips, no tax on, then earned income credit is going to always go up a little each year, which for no children and people making under $19,000, they get $649. So each year it's going to go up. And then those with 3 get up to $8,046. Investment income is more than $11,950, cannot claim the EIC. I don't think we have any of those. Child tax credit, which we talked about, student loan interest, people that make over $85,000 or $170,000 for a joint return cannot qualify. Qualified higher education expense for purposes 529 accounts. I don't know if you all have seen any of those. I might have seen 1 or 2. Qualified charitable distributions. The maximum amount of qualified charitable distributions that are not includable in gross income is $108,000, an increase of $3,000. I don't think I've seen that either. We talked about no tax on car loans. I was trying to see if it was in here about the filing status, but it's not. Eligible long-term care premium limits. These are the limits. We don't see foreign earned income exclusions. IRA deductions, I don't see many of those myself, but for 2025, the maximum combined traditional IRA deduction or Roth contribution is $7,000, $8,000 if age 50 or older. And it goes on to explain about what it is and premium tax credit, again, through 2025, taxpayers with household income that exceeds 400% of the federal poverty line for their family size may be allowed a premium tax credit. And so Hunter was talking earlier about this is the last year that they're going to get that. Health savings account for 2025, the annual contribution limits on deductions for HSAs for individuals with self-only coverage is $4,300. It's an increase of $150 and $8,550 for family coverage, an increase of $250. There is an additional contribution amount of $1,000 for taxpayers who are age 55 or older, and that's on the test. So that's all of the changes for 2025. Any questions? Okay, we're going to go on to tax layer enhancements. And it's going to talk about the enhancements to tax layer online for tax year 2025. Describe the security enhancements for usernames, list and describe the enhancements to report for tax year 2025 markers. Some of this we don't come in contact with, so I'm only going to go over what some of this is for site coordinators, and we will get that Saturday, but for just returning volunteers, you need to know that this year it's going to show your username, only so much of your 5 digits of your username. Because if you go to more than one site and you get confused as to which username you use, like if you come to Southland Mall and you use your Hickory Hill username, well, it's going to show you at the top your username so you can see if you're using the right one or not. We don't do reports too much. The state, well, this is still a report. And a lot of this is for the site coordinators, which we'll be going over Saturday. Even the message, I don't even think people use this if they want to send the volunteers a message at their site. It's the part in there that you can use to just send them a note. Used to be when you exit a return, in previous years when you exit a return, it displays the welcome page. Now it will display the list where you were in when you opened the return, whether it was the client list, the review returns, rejected returns list, validation errors list, or the customer portal list. This allows you to easily continue the task you were performing. So this year, the prior year carry forward enhancements is going to include more items. I'm glad that they're including Social Security benefits because a lot of people, sometimes they will not bring their statements with them. And so this will alert you if they filed last year, they need to have that statement. We haven't had to deal with the 3,800. The 5695, they're going to let you know if they need to file a residential energy credit. We don't deal with the 1040 NRs. This is just saying that if you had a drop down, it will let you clear your answer and write something else in its place. They have different new codes for the W-2, which we talked about earlier, the tax for tips. No tax on tips, no tax on overtime. This was that qualified tip that's included in box 7. Same thing we've been talking about. The tax for tips carries the smaller of the amount entered or the amount in box 1 to the Schedule 1A. If you enter a retirement plan code in box 12A, Taxpayer Pro Online automatically selects the retirement plan checkbox. That's when you, last year, when we put in a D down in box 12, now it's going to automatically check the box for retirement. When entering a 1099-G for certain government payments, there is a new column in the summary page, and it shows you here. The qualified charitable distribution is going to show you. I haven't had to deal with any of this. I'm not sure if anybody else has or not, but add form 1099-R to the return and complete other information. Click here, and then it's going to calculate it for you. Some of this we don't come in contact with. Now on the Schedule D, a new column was added for the type of a capital gain transaction on the capital gain loss summary page. This column indicates whether the capital gain was long-term or short-term, and it's showing you here how it's going to show up in TaxSlayer. If you have any adjustments, it's going to also show that amount too. When entering the payer's name for the 1099 miscellaneous or NEC, it will limit the length of the name to 35 characters. This is an enhancement due to the e-file limit for this entry box. And the injured spouse allocation, those that deal with that, well, if they don't have a federal refund, the Form 8379 is not necessary. If the form is present, then it will not electronically file the return. Instead, a message displays reminding you to remove the form. This is telling you that when you have EIC, it loads the pay, prepare, due diligence check sheet. And if you start entering data and decide that the check sheet is not needed, you can now click cancel. When you add a Form 48-6 date extension to a return that has direct debit, the TaxSlayer Pro online automatically generates these forms. For tax year 2025, TaxSlayer displays a new warning during the e-file process when the taxpayer's federal balance due is more than $1,000. This warning advises you to create estimated tax payments, vouchers, to avoid penalties on the next year's tax return. Isn't that something? So again, if the person has over $1,000 balance due, this warning will advise you to create estimated tax payment vouchers to avoid penalty on the next year's return. We don't deal with the 1040 NRs. If there is a Form W-2 on tax return with code W in box 12 for health savings accounts, but there is not a 8889, which this does happen sometime, then Taxpayer Pro will display a warning during the e-file process. It displays a warning when the Form 8615, which is the tax for certain children who have unearned income, may be required in the return. If the taxpayer's resident state does not have state tax, an e-file warning prompts you to complete the Schedule A General Sales Tax Worksheet. This might give them this might help them. And the consents, I think when we printed the return last year, it came before the return, well, this year is gonna come after the return. Those consents that the taxpayer has to sign each year. And that's it for the enhancements. Okay, so now we are coming to the reminders. And I want people to chime in because I only thought of a few. And right now, one of the reminders is if you see that you're going to not be able to be available on a certain day that you had previously said that you will volunteer, please call ahead of time and let the site coordinator know what's going on so that they can reschedule for that day. Please make sure that you input your notes into the system on rejects, on any in-process status, because a lot of time, a lot of returns will be listed as in process and they should be in complete or either in review or complete, not in process. But if they are in process, make sure you have notes. And those that are in process that needs to be deactivated, make sure that you deactivate those returns timely. Can anyone think of anything else?
Yes.
What?
Document 6101 that I shared with everyone last year, which is the tool that a person can use their phone to take a picture, and it'll take them directly to whichever one of the places that they need to go, such as the low income tax clinics, to make a payment or apply for a payment plan, to deal with an identity protection PIN. So again, that form is publication 6004.
And
If you stop sharing, I can share that. I think I figured it out.
Mhm.
But if otherwise, don't worry about it. It's publication 6004. And it's a very helpful tool. As I stated, I shared with a lot of you last year, and it's very helpful.
Well, you can bring it up.
I can bring it up. You through
I
sharing?
mean, but yeah, you can bring it up. Let me stop.
Have you stopped? I
Yeah.
got it up, but I don't see that. I do
I
not see that share that I saw before.
Yeah, I stopped.
Stopped.
See if I can
What'd you say, Connor?
Let me see if I can like prompt you to share. I can ask you to start a video. Did you get anything?
Well, everybody can just take a note. It's publication 6004.
Okay, another reminder is to for people that are screening, I guess I could say more so than greeters or screeners. Make sure that you get all the documents from the taxpayer. And what we do at South Lamar is the screeners do pull all of the documents and they paperclip or staple them to the 13614C so that when the tax preparer gets all of that bundle, they will have everything they need. As far as rejects, some people fix their own rejects. Some people sign a person to take care of all the rejects. I know when I'm doing the rejects, I try to do them halfway of the time of the site. Like we start at 10, so maybe at 1 o'clock, I'm gonna start working rejects if we have them. Hopefully we won't have that many, but if we do have them, I start working them then. So that we can go on and call those people and get them back in there as soon as we could. Anybody else have any reminders?
Yes, also when a client comes in inquiring about perhaps a refund that they haven't gotten and you review it, there is a form 3911 that you can give to them to fill out so that they can send it to Internal Revenue Service and make that inquiry themselves, since we've done all we can do. Again, that form is 3911.
I don't know how many people use this, but this is the springboard that comes up when you type in the TaxSlab Pro .vita. This is the springboard, and then you will type into Pro online to get to your specific site. Well, when you use this knowledge base, you can use it and get a lot of information. Because I put in BBB for 2025. And naturally, it wouldn't come up now. Probably need to put the big, beautiful bill. Whatever you type in, it will come up, and then you can go into each thing and it will give you a lot of good information. But these are old years, so. Okay. Okay, well, I'm going to pass it on to Denise.
Okay. All right, the question was asked about the quality, if the quality review is required again once the rejected return has been corrected. And usually what happens is that if that return, say for instance, the Social Security was incorrect for a dependent or what have you, whatever the case may be, usually that correction is made and then the return is retransmitted. Okay, so you stop sharing.
Yeah. Mm-hmm.
We'll try. Look, I'm gonna try this again. I see what's been happening, I think. Okay, can you see that?
Yes.
I see it.
Okay, thank you.
Yes.
All right, so is the publication, which is 5101, and it's talking about the intake process. And in here, it has the 13614C. And so since most of you and all of you should be have had at least one season under your belt, you're familiar with this form. And so what happens is that this part here is for the identifying information, which is the name of the person who's filing along with their spouse if and they are married, their address, the date of birth, the job that they have, as well as a telephone number, because as we just got through talking about rejects, if there is a reject, we need to make certain that we have a phone number by which they can be contacted, either by way of voicemail or maybe they, I think some people said that they text them. So we want to try to get that resolved as soon as possible. Okay, so then as we go on down, this is one of the errors that we have as it relates to rejects, because children go out, some of the youngsters go out and they get a job at McDonald's or Wendy's or whatever the case may be, and they excited about getting their refund. And so they come in and we ask them, because I've seen it and heard about it, can your parent claim you or anybody else claim you? And of course, their answer is no. And say no and we go ahead on and send the return through, then they get their refund, which really usually is little or nothing, but it's something to them. And then when their parents come in or go to maybe another location to have their return prepared, then their return rejects because that person has already been claimed. And so a lot of times what ends up happening is that we do an amended return to make the correction, but as we know, that's a long process. Okay, so then we go on down here where the part about a U.S. citizen and all of the other things that follow. And this, if needed be, this is in publication 4012. If there is a resident, a non-resident alien, where there is a tree that you can follow. Then if they're due a refund, you have this here. So you want to check this to make sure that it goes direct deposit if that's where they want it to go. And we want to make sure that we get their bank information. If they want to set up an installment agreement, we also can assist them with that, as well as a direct pay. Some people, when they owe, it's very few of them that I've had, but when they owe, they want to go ahead on and resolve their delinquency. And here we go on down where they're asking you about your written communication. So you answer that. And the next one is about the presidential election campaign. And most people say no, that I've waited on. The next area is where we have a lot of people that are confused. And I thought that maybe they would change this, but you've got never married. And so the never married, there are people who've never been married, but this also covers people who were married and then they're single. And so you have to explain to them that that's where they fall. So we want to make sure that here you answer each question correctly and you put the right answer here for them. And it's very important that you answer or you obtain the dates of these, because we know that for a widow they have for a widow, if they have a qualifier, they have 2 years by which they can claim their dependent. And so you want to make sure that you ask that. In fact, that's one of the questions that is on the test. Okay, and then this area, you want to complete this. A lot of people that we've run into, for whatever reason, they put their name down there also, and we have to strike that out. But you want to list the names below of everyone who lived with you last year. Where really, there are people who live in the household with you, but you're not claiming them. So there are people that say they just list everybody, and when you're going through it, you have to end up going striking through and initialing as you go on to make the necessary the accurate marks that need to be made on this.
Denise, it was a question about the PIN number. I mean, the ID.
Yeah. Okay. Okay, so we do want to get the PIN number. We're going to ask them, because you ask them a lot of times, and they say no. And what happens? We end up, that's another one of our rejects that we have, which is up here in this area here. It's right here. So you have to give the person has to give you their PIN number, and hopefully it's correct, because some people guess, and all it does is prolong their refund or balance due, because it's not going anywhere if they don't have the right PIN. So we really ask them if they will bring the paper that they've gotten from Internal Revenue Service, which is going to show their PIN. And every year they are assigned a PIN. Now, for those clients who have not filed in a number of years, you will get the notice, and that notice will tell you that for every return that you're filing in 2026, you may use this PIN. So that means that you can use that PIN if they're filing returns from 21 on each return. You're going to place that PIN in the area that's required. Any other questions as we go on, or before I go on? Okay, so then here this area is the income, is the state is income. So they're supposed to give you all of the income information that they have from their wages and how many jobs. And here's a tip area. And of course, the B and the A tells you that either it's basic or advanced. So we're going to follow those so that we can make certain that the correct, right preparer is working on the client's return. And as we go on down, we see retirement account and disabilities such as payments from insurance and workman's compensation. And of course, we know that in our 4012 in section D, that covers all of the income. So if you have any questions about income, then you can go to your 4012 and look at it when you're dealing with income. And of course, we know that there are people who will come in and they've worked a number of jobs, but it's time to file. So they've gotten, say, for instance, there is someone who's had 5 jobs throughout the year. And so they've gotten 2 of those 5 W-2s. And then they come in and we ask them and they lie. Yeah, this all. And we prepare their return for them. And then what ends up happening is that later on, when we actually have time to prepare the amended return, here they come with those other 3 W-2s. And so we prepare the amended return and let them deal with the results after we explain it to them. Are there any questions thus far? Okay, and on this highlighted side here, we are the people that are supposed to check off anything that they have listed over here, so we'll know that we're doing the right thing and that we have everything that we need to complete the return. Okay, stocks and bonds, we have a lot of that from people, and a lot of them don't really understand it, and they bring a whole list of stuff, and some it will wash out, and sometimes it makes their return be over the amount that we can prepare the return for. So be on the lookout for that. Again, that's the income section. Page 3 is the expense here, where you've got the mortgage, taxes, all of that, student loan interest, child and dependent care, all of those things there. Sometimes you may have a client in front of you, and it may be a husband and wife or just a single person, and they have a child, but they did not list any child or daycare expenses. And so you ask them about that, and sometimes they've forgotten it and may have to come back, and then sometimes they may say, well, no, don't worry about it. My mom keeps the child. Okay, and so as we go on down, these are other questions that they have to answer about what happened during their 2025 year. If someone in their family took additional classes for technical school, college related things of that sort, solar house, all of those things, they're supposed to respond to those. And if they have checked them, here's another one of our big errors. Reject errors, the 1095-A. Oh no, I didn't have the Obamacare. But what I've learned is that a lot of people who come in, their employers have started using some of the companies that have the 1095-As unbeknown to them. And so once we get into it and explain that they need to call the 1-800 number that we have for the marketplace, and they deal with them, then they find out that they have it. And so that's an argument that they have to deal with their employer. But as we share with them, you did have the marketplace as far as we know. And if you don't provide those figures or that document that have those figures, then your return is not going anywhere.
Denise, someone was saying that when you were talking about the PIN numbers,
Yes.
the children could have them too, because them fathers or the mothers claim the child and it rejects, and then they have to get a PIN number for that child. So a lot of children have PIN numbers too.
And that is correct because there are people who, for instance, you've allowed someone in the past years to claim your child. Now you're working, you want to claim your own child, but that other person that you allowed to claim that child is claiming it. So in order to prevent that from happening in the future, that child has to get the child, whoever it is that you're claiming, you have to get a PIN number for them. So when we say PIN numbers, we're talking about PIN numbers for everyone who's listed on that tax return. Any other questions in the chat, Kara? Okay, so then we have other things like we've already talked about purchasing a new vehicle. There are people who have settled with different places and they end up getting a 1099-C. So we know that that has to go on the return in the appropriate area. Karen mentioned by making estimated tax payments. We want to always ask people if they made estimated tax payments because there are some people who are self-employed. I know one lady in particular, she's been making estimated tax payments every year and she brings her proof in. And when we first got this lady, we sort of slipped up on her, but she's been coming every year and from that past era, people have learned that she's ready. She got all of her stuff together. Okay, then here's the optional information about them carrying on the conversation and at what level, as well as reading, or are they disabled and are they a veteran or the U.S. Armed Force, as well as their spouse. And these are questions that we have to answer because it's a part of the software. And then down this area here, if there is anything else that we may need to have in order to prepare that return, here's an area for you to list it. Say, for instance, we have 3 or 4 people that come in, and I'm sure others do too, where they have a lot of children. And so we run out of spaces on that first sheet. And so here's an area by which they could put this.
And then someone brought up about a child also might have to pay into the Affordable Care Act.
Right. And then this is the consent form that Karen mentioned. And so you discuss this with the client so that they can sign this. Sometimes you may run into people who say, oh, I don't want to sign it. So you explain to them and you move on. Any questions? And of course, remember this year, if the child is not under 17, which again is another question on the test, then you cannot get credit for them as it relates to that child credit. Any questions? No questions? Okay. I think it's back on you, Karen.
Oh,
Stop sharing.
okay. My part was the refundable and non-refundable credits, which I think, since it's getting late, if
Everybody should know about
you have
since
any questions,
yeah.
then yeah, because it's it's 25 minutes to 9.
Mm-hmm.
What do you think, Hunter?
No, that sounds good to me. Yeah, if anyone has any questions, feel free to follow up, but nothing, outside of the changes we've covered, all those training topics would more or less be the same. It's just kind of a review. But I think with the given time we have left, we can move ahead.
Okay, so that'll be the test.
Yeah,
Yep.
because we've already talked about that, and everybody knows since they're returning people that they're supposed to have the picture ID for the
Yeah,
client, the
all
social security
this.
cards, all of that.
Right,
That's a
right.
known.
And all that's available on the IRS's website too. I'll put the link in the chat. But yeah, all that's still the same from last year. What the taxpayers are required, all the tools and resources are the same. And y'all should have access to those in the links from my emails. So yeah, if we want to move to the test, we can go ahead and cover those.
Okay, so I had agreed to do the first part, so we need everybody to listen up.
Mm.
And I think if we listen up and move on, we'll be able to get all the answers, and you can go on and be certified. So for students, standards of conduct.
Oh, you need a 67.
Yeah, I don't need, I'm just gonna go ahead on because yeah, we got time. We don't have time on our side anymore. So standards of conduct. The first answer is E. The second answer is A. The third answer is C. The fourth and fifth answer is B as in baby. 6 and 7 is A as in apple. Number
I'm just
8
doing it on my
is
phone.
D.
You sure?
Excuse me. Number 8 is D as in day. And number 9 and 10 is A as in apple. Intake and quality review. Number 1 is A as in apple. Number 2 is D as in day. Number 3, B as in baby. Number 4, D as in day. 5 and 6 is B as in baby. Number 7 is A as in apple. Number 8 is number 8 is D as in day. And number 9 and 10 is C as in candy. So everybody with me thus far?
Somebody need to mute. I couldn't hear that last one.
Okay, what last one you talking about?
On the intake.
Okay, the last one on
Yeah.
intake, number 9 and 10 is C as in candy.
Okay. Thank you.
All right, everybody go on mute so we want to roll on. All right, the next one is the site coordinator test.
Oh,
Number 1.
You don't need to do that for this training.
Oh, that's right. Not for y'all. Sorry, but some of y'all will be there with us on Saturday. Let me say this. Hunter is about to do the advance. My suggestion to you, especially if you have not been preparing some of these returns in the past, and that is to go into the practice lab and work scenario 7, 8, and 9 to see how it is that those answers equal the answers that we're giving you. Hunter.
Wait, are you saying you want me to go through the practice lab?
Oh, you're going for the advance. I was just telling them that
Oh,
I
okay,
suggest
right.
that they go in and do that, especially the one that has the simplified method.
Yes, ma'am.
Okay.
And yeah,
it's on you.
Okay, yeah, just like Mr. Denise was saying, we're going through these very fast now for the sake of time because we want you to have this information as a resource for you, but we do encourage you to kind of like go through these yourselves, and you can still have this recording and this training, as a reference, but it's helpful to go through and just do it, especially with this not being your first year. You can go through it pretty quickly, and the ones you actually have to work out with the scenarios in the practice lab, I think there's only like 3 of them. So it's good practice, so we encourage you to do that. But having said that, we can go through the advanced ones. Do you want to keep sharing your screen? You can keep doing it if you want to.
You can just get the answers. Yes. Karen got the screen.
Okay. So question 1, Joy qualifies for head of household filing status, so we can see that that is true, A. Number 2, who qualifies to claim the EIC for Valerie? Number 2 is going to be A, Joy qualifies them. Number 3, Joy is not required to report her lottery winnings as income on her federal tax return. We know that that is B, false. We need to report that as taxable income. Looking at number 4, for which children can Matt and Megan claim the child tax credit? We know that that is B for Janice. Number 5, the Summers qualify for the child independent care credit. That is D. That is false. They do not qualify for the child independent care credit. Number 6 is going to be Nancy is eligible to contribute an additional $1,000 to her HSA because she is age 55 or older. Number 7, Form 8889, Part 1 is used to report HSA contributions made by D, all of the above. 8, what is the total unreimbursed qualified medical expenses reported on Form 8889, Part 2? That is going to be C, $4,260. Moving on to question 9. Which of the following statements is true? That's going to be B, Alexa may claim Lillian as a dependent if Amy chooses not to claim her. The number 10, Amy is eligible to claim Lillian for the earned income credit. That is true, A. Number 11, Julia can claim the $1,500 mortgage insurance premiums as a deduction on her Form 1040 Schedule A. That is B, false. Number 12, what amount of gambling losses?
Wait a minute. Wait, Hannah.
Yes, ma'am.
For number 11, Julia can claim the $1,500 mortgage insurance premiums. That's false for this year, but next year they're gonna start it back up. It's gonna be permanent, I think.
Okay, but for this year,
2026. 2026.
Okay. So for this year, all right. Good to know.
Hunter, what was number 9?
Number 9 was B.
B. B as in boy.
Yes, ma'am.
Okay, I just want to make sure.
Where are we on? Number 12. What amount of gambling
Wait a
losses?
minute, I'm sorry.
What's 11?
11, please.
Oh, 11 is B. 11B is false for this year. For future years, that'll be different, but for this year, she cannot claim that. All right, are we ready to go number 12?
Yes.
All right, number
Yes.
12.
Yes.
For what amount of gambling losses is Julia eligible to claim as a deduction on her Schedule A? That is going to be C, 2,000.
That's gonna change too.
That's going to change in future years?
Yes.
Okay. Number 13. Carlos is eligible to claim the American Opportunity Credit on his 2025 return. That is B, false. Number 14. For which of the following IRA distributions will Carlos owe an additional tax of 10%? So this is the one I actually got wrong when I did it. I think it's D. I think I put C on accident when I think it's D. Because someone confirmed that it's D.
Okay, which one you talking about?
Number 14.
14 is D as in date.
All right, thank you. Yeah, okay. So number 14 is D, neither A nor B. Number 15, moving on to the scenarios. Again, we encourage you to work these out on your own time, but we're not going to do that here for the sake of time. Looking at the question, so 15 is what is the taxable portion of Vet's pension from Liberty Enterprises using the simplified method? That's going to be C, $21,519. Number 16, the Willises are not eligible to claim the credit for other dependents on their tax return. B, that is false. 17, what is the total amount of other income reported on the Willises Form 1040 Schedule 1? That's going to be D, $1,350. Number 18, Martin is eligible to deduct qualified educator expenses in the amount of $275. Number 19, a higher standard deduction is available when the taxpayer D, both A and C. So when they're age 65 or older, or they're legally blind. So the answer is D for both. Number 20, which of the following expenses do not qualify for the American Opportunity Credit? That's going to be C. A parking pass is not a qualified expense for that. Number 21, the taxable amount of Yvette's Social Security income as reported on the 1040 is C, 20,822. And number 22 is going to be, what is the Willis's total federal income tax withholding? That should be D, 8,160. Number 23 is Jocelyn Jones's scenario. Scroll down to those questions. All right, question number 23. The net short-term capital gain reported on Jocelyn's Schedule D is going to be $200. Number 24, which of the following can be claimed as a business expense on the Schedule C? For 24 is C, tolls. Tolls be claimed as a business expense. 25, Jocelyn could take a student loan interest deduction of $2,500. A, that is true. 26, what is the total standard mileage deduction for Jocelyn's business on the Schedule C? That's going to be B, 1,750. 27, the amount of Jocelyn's lifetime learning credit is $480. B, that is false. Number 28, what is Jocelyn's additional 10% tax on the early withdrawal from her IRA on Form 1040 Schedule 2 Part 2? That additional 10% is going to be E, $240. And number 29, to avoid having a balance due next year, Jocelyn can use the IRS withholding estimator to calculate her tax liability and submit a new Form W-4 to increase her tax withholding. That's going to be true. That's A, and that's very, very applicable to a lot of our taxpayers. And then the last scenario, so yeah, it is only 3 scenarios. The last one is Carl Graves. Looking at question number 30, what is Carl's most advantageous filing status? Qualifying surviving spouse, because he does have a dependent and his spouse passed away within the time restriction. Number 31, Carl's adjusted gross income on his Form 1040. His adjusted gross income is going to be B, 37,128. Number 32, Carl is not eligible to claim the additional child tax credit. That is B, that's false. Number 33, what is the maximum amount of Carl's non-refundable credit for retirement savings contributions? Form 8880, line 10. That answer is going to be C, $150. Number 34, what is the total amount of Carl's net premium tax credit is $388. B, that's false. And lastly, number 35, Carl's child and dependent care credit Form 2441 is 506.
What was number 30?
Number 30 was D. D is in dog.
What is 18?
18 was 275.
Can you give the answer again to 24?
24 was C as in cat.
Answer for 22, please.
22 is D as in dog.
Thank you.
You're welcome.
Hey Hunter, can you what's the answer for number 6? I didn't get that one.
Number 6 is B as in boy.
Okay, thank you.
You're welcome.
You said 24 was D?
24 is C as in cat.
D.
I'll go through them all again real quick, just really, really quick to make sure y'all have them. 1A, 2A, 3B, 4B, 5B, 6B, 7D, 8C, 9B, 10A, 11B, 12C, 13B, 14D, 15C, 16B, 17D, 18 is 275, 19D, 20C, 21C, 22D, 23, 200, 24C, 25A, 26B, 27B, 28B, 29A, 30D, 31B, 32B, 33C, 34B, 35,506. And y'all don't tell the new volunteers we go through it that quick with the returning volunteers. we definitely want everyone to do it, but especially, you know, with y'all having done this before, you know, all this stuff on these exams isn't going to be new to y'all, but it is good to brush up on it. We do encourage you all to kind of go through those exams on your own, and use, you know, this as a resource to help you, but to still do it on your own if, you know, you have the opportunity to do so.
Hunter, I have a question.
Yes, ma'am.
I get this wrong all the time. So what over-the-counter prescription medicine is not included?
I don't know. Hang on, let me look
Because
that up.
when I look it up, it says some of them are included and some are not included, and some of them actually need a letter from the doctor to be included. So I'm curious. This is the same one I missed last year. I should have gotten it right this year, but
I think it's in the 4012.
I looked it up. Like I said, some of them say that not all over-the-counter drugs are included. So I always defer to not included rather than included. I guess I should go the opposite way.
I think they're over-the-counter, I believe, is typically not tax deductible. I think there might be an exception for insulin, but that might still need to be. It's normally prescription is deductible, over-the-counter is not deductible as a rule of thumb. I think there might be an exception for insulin, but I'm not entirely sure.
Okay, I just want to make sure.
Which question does that pertain to?
That is number 8.
Number 8. Give me one moment.
Yeah.
It's got a list in the 4012 up under F8 and 9 for medical expenses.
Yeah, but there's no list on this question. I mean, they don't tell you what the over-the-counter medication is. So I'm
what
always.
Question are you?
I'm sorry.
What question?
Number 8.
Number 8.
I'll read it more.
I think the main things I just looked at that and I took out.
What? Number 8.
Number 8 is the one with Nancy James. It shows her list. So she has $600 for physical therapist for knee surgery, $1,200 unreimbursed doctor bills, $320 for prescription medicine, $1,600 for replacement of a crown, $500 for deep clean teeth, $40 for over-the-counter medication, and $260 for gym membership.
So I'm only asking about the $40 for the over-the-counter because sometimes it can be included, and there are cases where it's not included. So that's why I was asking.
I think the rule of thumb is not included, so not tax deductible, with certain exceptions applying. So in this case, when it just says over the counter, I think the rule of thumb is that it's not deductible.
Okay, that makes sense. Okay.
How about on the question
I miss that
12?
one every year.
How about on question 12? They have gambling losses, or she can only take $2,000. She won $3,000. I thought it was up to the amount of the winnings.
Only if the losses exceed the winnings. If the losses are less than the winnings, then you can only deduct up to the amount of the losses.
Yeah, but she says her winnings are $3,000.
Right.
And you put down here she can only deduct $2,000.
Right, because her gambling losses were $2,000. So if her losses don't exceed her winnings, then you can only deduct up to the amount of the loss.
All right, right.
On question number 8 on the advance, did you say the answer was B, $4,220?
On number 8, the answer is C, $4,260.
$60. Okay. Thank you.
You're welcome. Sorry for that one. I'm trying to remember what the specific things were, but I took this back in December, so I don't remember what. It's been a minute. But yeah, I got for number 8. The answer is C, $4,260.
Okay. Thank you.
You're welcome. Are there any other questions? Well, if there aren't any other questions, that's pretty much it. I'm sorry that I spent so much time talking about the one big beautiful bill changes and we had to kind of rush things there at the end. But you know, we are kind of expecting that in terms of, you know, new updates that might be important to share to returning volunteers, that it was you know, we want to talk about those because those are things we'll probably come in contact with. And the main thing is coming into contact with people who might have misinformation about what those are. So knowing with the correct information that we can communicate to them. So we definitely wanted to look at that, but I'm sorry I went a little over with my time. We had to rush the rest of it. If you do have any questions about any of the other materials or anything that you weren't able to cover in as much detail as you would have liked, feel free to reach out to me and I'll try and follow up with you as quickly as I can. But otherwise, Karen and Denise, do y'all have anything else y'all want to add?
No, it's just that I'm excited for this tax season and I'm hoping that we have a crowd, a big crowd.
Oh, we will. I'm pretty sure we will.
They've heard about the change, so they looking forward to getting some additional money, hopefully.
Well, I'm already getting Texas.
A question in the chat, will this recording be sent to us? So I am recording it and I will eventually share that with everyone. But truthfully, like all the videos are like hours and hours long. So it takes like over a day for my computer to process them all, edit them, and then publish them to YouTube. I probably will not have a chance to do that until next week after all the live sessions have been done and I can do it all in one batch. So that'll come later in the month, but the recordings will be sent.
So go take your tests. Try to go over some of those examples so you'll be better familiarized with them so you can get your 13615 to the appropriate person.
Yes, ma'am.
When we do start January 26th.
Oh, that's right. It's coming up quick.
Day after my birthday.
Happy birthday.
Sweet 81.
All right. It's a good year.
81. Wow.
Yeah.
Man, we all getting
Praise God.
No, that's right.
Woo. I want to be like you.
Well, again, we thank each of you. We hope you have a great night and a blessed rest of the week. And for those of you who are site coordinators or assistant, we look forward to seeing you on Saturday. Good night.
Thank you.
Good night.
Good night. Good night.
Thank you.
Right.
Good night. Thank you.
Good night.